When I was a sophomore back in university, I had this goal to become an investment banker. I was on this finance club at school, and lots of the older students and alumni ended up in banking, and many of them did internships in banking as well. And back then, I was still incapable of coming up with independent thoughts, so I just followed what everyone else was doing, and that was trying to become investment bankers. And I remember I was visiting home once, and I told my parents about this new goal of mine, and they asked me, what do investment bankers actually do? And honestly, I didn't have a very good answer for them. I knew what the benefits were, I knew why people did banking and how hard the job was supposed to be, but it was really difficult for me to articulate what you actually did on the job. So in this video, I'm going to try to explain exactly what you do on the job in investment banking. I'm talking about putting PIBs together or spreading comps by hand or having to rearrange logos on a slide. What are the actual tasks you have to do and what can you expect out of a job in investment banking? So you can conceptually think about investment banks as firms that help companies with corporate finance decisions. And corporate finance includes decisions like mergers, acquisitions, raising capital, divesting different business units. So investment banks help with these operations. They can help by being a direct link to capital markets, meaning that they can help you with an IPO or that they can help you raise debt for your company. And they can also help you just by being an advisor. They can look at your company's financials, they can look at the forecasts that you have as well as different problems you're facing and give the best recommendation on what to do. So in this video, we're going to talk about the two major kinds of deliverables you'll have in banking, and that would be pitching your clients and advising your clients. There's lots of different tasks you're going to do within these two categories, but ultimately it boils down to this: either winning new business or advising those companies. Now, the first thing we're going to talk about is the pitch book. The very first thing you have to do in banking, just like in sales or in consulting or really any professional services, is to get clients. You can't do any of the other work until you get clients, and that's why you have to pitch companies. This is really where senior partners make their money, and honestly how different partners stand out from each other. The job of the partner is really not to do the analysis itself, it's to win clients and get them signed on deals. Senior partners will often have strong relationships with a bunch of different companies and present them potential M&A opportunities or ideas or even just strategic reviews of their own company. Now, formally speaking, if a company has a specific mandate or a specific project that they want someone to work on, this is called a bake-off. A bake-off is essentially when a bunch of investment banks try to pitch a potential client, and the client will review all these options and pick someone to work with them. This is very common if a company is about to IPO or if a company is trying to solicit an advisor to complete a buy-side transaction. Now, from a format perspective, I actually think it's quite a bit like Shark Tank, where you have the companies sitting and analyzing all these different pitches, and then the bankers will come in and they'll present their ideas and they'll present their analysis. Now, a lot of work still does go into the pitch. It is still a demonstration of the investment bank's work product and is thus still taken quite seriously. Now, tactically speaking, here are some of the specific tasks you might have to do. You're most definitely going to have to use PowerPoint to design and create pages or slides for the pitch deck. You'll likely be working off of past pitches in the same industry as a reference. As an analyst, you're going to be working with the associate to double check and review all the pages in the pitch book. You'll be using Excel to build the financial models, exhibits, and analysis that are included in the pitch. You'll likely read industry research to develop a view on the industry, and that's going to inform the recommendation you give. You'll be organizing research reports and articles into a public information book. This is what is known as a PIB, which is essentially a huge compilation of all the relevant filings that someone needs to know. And your MD is going to read this in order to educate themselves on the space. You're also going to use Outlook to schedule calls between the investment banking team and the client. And finally, there's the presentation of the pitch itself to the client. Now, the workflow for creating a presentation, which is true for all the deliverables here, works kind of like the following. Generally, the partner will come up with the idea of who to pitch. The VP sketches out all the materials as well as the specific pages that need to be made, and I would say it's often the VP who's really the architect for the deck. These VPs are people with several years of investment banking experience that understand what the MD wants. After that, it's the job of the associate to make those slides more tangible, and oftentimes for the analyst to execute on them and actually make them in PowerPoint. I would say on average, your pitch book is probably going to be between 30 and 60 pages, and each page probably takes an hour or two to create. Now, in this example from Goldman Sachs, you can see how a lot of the pitch book contains the accomplishments of the investment bank, issues the client should consider, and then some financial analysis supporting the recommendation. And it's also very common to have pages like this, which are sometimes referred to as a tombstone page or a qualifications page. And this is the reason why people say investment bankers just move logos around, because a lot of the time you are making salesy pages like this that don't really have analysis on them, that just involve moving around logos. And Wall Street Prep's website has a great list of pitch books if you want to check out some of their examples. Now, if the pitch is successful and you actually get hired by the company, that's when a lot of the real work begins. And there's a pretty broad range of activities that you could advise on. Some of the most common ones include advising on a potential merger, on a potential acquisition, on a sale. You might also advise on the creation of a strategic partnership. It really depends on the needs of the company itself. Regardless, this is really where the heavy lifting in banking actually happens. The main difference here between a pitch is you're going to get all the company data that you didn't have access to before. In investment banking, you work with a lot of private company data, and essentially you're going to work with your client to organize their data, build financial models, and prepare marketing materials based off of that information. And I'll also point out that 10x EBITDA has a bunch of these investment banking presentations on their website that I think are great references if you want to see what the work product is like. So to take an example, let's look at Citi, who advised Aircastle on their all-cash sell-side transaction. And if you look at this presentation, which was made to the board of directors, you can see just how much more analysis that this presentation has. It's very common to have summary slides up at the front of your deck, but a great deal of analysis supports each and every one of these numbers. Just looking on this page alone, we can see that a comps analysis was done, a dividend discount analysis was done. There's also precedent transactions in here. So to finish an entire deck, you have to build a financial model that has essentially all of these different valuation components to it. I know this deck is only 17 pages and many of them are just appendix slides, but a great deal of analysis underlies this. This presentation was made to the company's board of directors, and nothing gets to that level unless it was sanitized several times by the associate VP and partner who pored over every ounce of detail. Now, when you're operating a sell side, it's also your job to run the process itself. Ordinarily, that means reaching out to potential investors, potential acquirers, and finding the best fit. As part of a sell side process, you're also going to have to put a data room in which you upload all of the key financial documents of your client. You're going to help organize this data. You're going to work with the company's FP&A team to make sure that it's up to a certain standard. You're also going to be working with accountants to make sure they have the information they need to make a Q of E report or quality of earnings report. And this is really where the analog to being a real estate agent comes in. It's your job to really make the asset look as nice as possible because your goal is to get the highest possible price for your client. That means running a competitive process, picking the right buyers, as well as giving them the information they need. Now, just to provide another example, if we look at this work product created by JP Morgan for UGI, we can really see how much analysis really goes into this work. But we can also see that the scope itself really depends on what the client needs. And although I've worked on lots of projects, the actual pages that you have to make can differ very differently depending on your client. Every client is going to have its own unique capital structure as well as financial situation, and that's what requires such different analyses. And I think the diversity of these deliverables really shows you why people say you build such a diverse skill set in investment banking. And if you would like to learn more about investment banking, including all the qualitative and technical questions that you're going to get, you should check out the course on our website at peakframeworks.com. So thanks for watching this, and I will see you in the next one.